to the GetRealWealth.com radio show, where wealth means a lot more than just building a second stream of income. Listen and learn how 70% of the millionaires in America used real estate to create a lifestyle that most people only dream about. A lifestyle that includes good health, family, romance, travel, charity, and all the other parts of a balanced life. Now, here is your host, real estate investor and mentor, Steve Davis.
Good afternoon and welcome to the show. I'm your host, Steve Davis, where as always, we're here talking about building that second stream of income with real estate so that you have more time with the family. You can buy your life back from corporate America if you're in a job you're unhappy with, or you can find a job you are happy with because you don't have to choose a job for money. You choose it for joy and service. And we talk about really just leading a balanced life. That's the main theme of this show, even though my focus most of the time is on real estate. It means nothing if you don't have a balanced life. I joke about this, and it's kind of sad, so I probably shouldn't joke about it, but it is amazing how many guys and gals I know who make large sums of money and they're miserable. Money doesn't solve this one's, I better be careful going down this rabbit hole. Money doesn't solve every problem unless you design it and use it properly. A lot of people use money improperly. They use it to buy toys, status symbols, travel, and things that really put them further in debt. You know, it's amazing to me how many people, it's the old point that whether a person makes 60 grand a year, they live paycheck to paycheck, take that same person, double their salary to 120, and guess what? Within about 5 years, they'll be living paycheck to paycheck. See, there's a mentality in the middle class and the poor to spend everything that they earn. And the rich are taught to save 10, 20, 30% of everything they earn and go buy income-producing assets with it. So it's just a different way to live, but I can promise you it's a much more effective way to live. Now, my wife asked me to do, she says that sometimes I can be a little harsh on the radio for days on end, you know, as I try to create pain to help motivate you to take action. And so she said, why don't you do a fun Friday? And so that's what we're going to do. So this will be a review for some of you, because the material we're going over, the 8 reasons that we chose real estate, I went over these in January at least once. I try to do it no less than once a month, but I haven't done it in February, so we're going to do it today. And again, this will be a review for you, but you want to listen to it because repetition is what? The mother of learning. You want to get these thoughts, these reasons into your head so that if you ever start having doubt as to why you're investing in real estate, you can go, no, wait a second. There's 8 reasons that I'm investing in real estate, and they should be memorized. You should know them. Some, we'll call them an individual, says something stupid about real estate investing. You should almost be able to regurgitate these 8 points, and that'll be the end of the discussion. I've done this many times where, and I haven't done it recently. This was years ago when I was first becoming a real estate investor, and there were only 5 reasons at that time. Yeah, I think it was 5. But I could spit them out in literally 30 seconds. And some dummy, I was the last place that I did it, I was sitting with a group of attorneys and at a charity event, and they were all of them complaining about their life. How much they worked, how much they traveled, how much they were away from their family. And I didn't say a single word because I was going, I don't travel for work. I don't hate my job. I love what I'm doing. I have plenty of time with the kids, plenty of time for Rome. I didn't say a word because I thought it would come across arrogant. Then one of these individuals go, well, what do you do? And I said, oh, I'm a real estate investor. And they laughed and they said, I don't want any of that. And I remember it blurted out. I went, really? I'm the only one not complaining. You all are complaining. I'm the only one not complaining. I mean, and I went over these 5 points. I'm telling you, you could have heard a pin drop at that table. I think that probably every wife at that table probably kicked their butt after that dinner because it was embarrassing for them. Here they are, again, complaining about their job, how many hours they have to work, how bad it sucks. And then I'm sitting there going, oh my God, my life is perfect. And my wife, of course, backed me up. So it's really good because you're going to get beat up by other people who don't understand what you're doing. As you start building wealth for yourself, I talked about this 2 days ago, you only want to give your give-up goals to everybody. If you're going to give up smoking, give up overeating, give up obesity, tell everybody. Then you'll be embarrassed if you don't do it. But your get-up goals, be very careful who you share those with. Only share them with your most trusted family and friends. Family and friends that you trust completely. Because otherwise, and what happens though is it eventually comes up like it did at this dinner party. I didn't want to brag, but it struck my ego when he said that to me, and I just kind of blew up. So keep your get-up goals between you and your closest friends and relatives, but it's going to come up, whether you like it or not, among people who are really not your friends, just acquaintances and so on. And it's just always nice to have these memorized and share them politely and then shut up, because there's nothing else to say after this. Now, I did get a very odd email that I want to address first. We've only got about 30 seconds, 45 seconds in this segment, but apparently there's a guru on the air that is putting down other gurus. I mean, spent an entire radio show putting down other gurus. And when we come back from the break, I'm going to talk to you about what type of person does that and why you really, really have to understand that that is a dangerous characteristic. Dangerous. Okay, this is the GetRealWealth.com radio show. I'm your host, Steve Davis. Phone lines are open, 281-558-5738. You're listening to AM 700 KSEV, the voice of Texas. Thanks for listening. Did you know that 70% of the millionaires in America used real estate as their main investment vehicle? You can and should have some real estate in your portfolio. This is Steve Davis, host of the GetRealWealth.com radio show. Starting with bad credit and no money at age 27, I began investing in real estate. By 30, I was retired. I will be explaining this at a free 2-hour introductory workshop this month. If you would like to attend, go to GetRealWealth.com. That's GetRealWealth.com. Thank you for listening. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. Phone lines are open. If you've got a question about anything to do with real estate investing, anything about building this second stream of income with real estate, please give me a call and let me try to address it for you. If I can't answer it on the air, I'll have you email me the question and I'll get the answer for you. But you're going to get your answer one way or the other. It's 281-558-5738, 281-558-5738. KSEV. You may also email me, as this lady did. It's asksteve@getrealwealth.com. Asksteve@getrealwealth.com. So anyway, the lady emailed me. She wishes to remain anonymous, I'm sure because she's a member of another group. And she brings up the point that I never put down other gurus. In fact, I'm almost ridiculously supportive of other gurus. And why is this guy putting down other gurus? I'll tell you why in a nutshell. It's massive insecurity. Massive insecurity. There's a big mistake that people make when they see someone and they go, oh, that guy's arrogant. He's always bragging about himself. He's arrogant. Let me tell you something. That's not arrogance. That's insecurity. See, he doesn't believe he's that good. If you're with someone who's confident in themselves, they never do anything to harm other people. Never. They don't need to. One, it's wrong. It's just corrupt. But they don't need to. They're secure in who they are. They're secure in their credibility. But when you see someone or hear someone bragging about how great they are, telling you how much money they have, all of these things are not arrogance. They're insecurity. They feel like you don't believe in them. They don't believe in themselves. And the reason it's dangerous is because those people also fall into a thing called jealousy. They hate when people are successful. They don't like it. They have to be number one. And if you do better than they do, they will cut your legs off. I've seen it happen. See, in my opinion, my students have to do better than me. If they don't do better than me, I must be holding something back. And the reason I believe this is true is because my students don't suffer with the same fears and insecurities that I do. Therefore, they can do better than me. It's very easy for me to consult someone and pick out their fears and insecurities and tell them how to fix them. It is much more difficult to look myself in the mirror and fix my own insecurities. Does that make sense? So if I'm truly helping my students, I'm helping them overcome their fears and insecurities and teaching them everything I know about real estate investing. They're supposed to do better than me. Yet I know gurus that hate it. They literally hate the success of others. See why it's dangerous to have somebody like that as your guru? See, bragging is not a sign of arrogance. Bragging is a sign of insecurity. And insecure people are dangerous. It's a psychosis. It's nuts. Now here's the big problem. If you listen to someone like that and you respect them, what does that say about you? You think they're great? What does that say about you? See, when I was 13, 14, and I dated girls, I would always put down their ex-boyfriend. It made sense to me. Because I was a stupid, insecure 13, 14-year-old. When I kept bringing up their boyfriend, what was I really doing? Advertising their boyfriend. And what do we know about publicity and advertisement? There's no such thing as bad publicity. So the more somebody puts down someone else, the more they are advertising the person they're putting down. It's without a doubt the stupidest, most insecure thing that an individual can do. So I'm warning you, stay away from people who do that. They're dangerous, because you could be the next person that they decide to attack. So that's the answer to this email. I appreciate the email. I don't even know who they're talking about. I have an assumption I know who it is, but I don't. But I'm telling you, arrogance, what people call arrogance, is actually insecurity, and it's dangerous. Okay, phone lines are open, 281-558-5738, 281-558-KSEV, or email me at asksteve@getrealwealth.com. Now, the first five of these come from the real estate guys. If you've ever heard their radio show, it's really good. It's a lot of fun to listen to. I think that's exactly what it's called, the Real Estate Guys. You know, I'll look it up during the break to make sure, because I always get their name wrong, but it's something like that. It's a pretty cool little show. But first reason, 70% of the millionaires in America used real estate as their main vehicle. It's that simple. Do you want to imitate successful people? Then get some real estate. Second reason we chose real estate is since 1776, real estate has doubled in value almost every 20 years. Almost every 20 years. That includes the downturns. We're talking real estate doubles in value almost every 20 years. 3, I love this one. Real estate makes money in both the up and down markets. This one is wonderful because those of you that speculate in gold, silver, stock market, you're not investors, you're speculators, you're gamblers. You buy low to sell high. That's not investing, that's gambling. You are constantly looking at your crystal ball, trying to figure out what the coronavirus means, trying to figure out what the next election means, what's it going to do to your portfolio, because you lose money in a down market. I had hundreds of clients whose portfolios went from $500,000 or $700,000 down to $200,000 or $300,000 in 2008 and 9 because they were speculators. They got slaughtered in the down market. Now, I was in 9 or 11 apartment complexes in 2008. Did the market crash? Yes. Did my property values drop? Yes, 30, 40%. Did I care? Absolutely not. Because what did I have? Cash flow. I didn't have to sell them. There was no reason for me to sell them. I just kept the cash flow and it went up. But then what also was happening? Real estate was on sale. I was able to pick up more property at deeply discounted prices. Simply put, we make more money in the down market. The reason I call this a wonderful thing is, wouldn't you love to have an investment where you sleep well at night, knowing that whether the market goes up or down, you're okay? It's a totally different way to live. Speculating, gambling, you're constantly worried about the market. Real estate, we don't care about the market. We make money either way. All right, let's go to the phone lines and talk to Philip in Houston. I guess he's got a question about Get Real Wealth. Well, Philip, welcome to the show. How are you today?
Good, Steve. Just kind of like did your comment about delay financing instead doing hard money.
Okay. I almost always use hard money. Could you repeat your question? It kind of sounded like you said I don't use hard money.
No. I'm saying it's your opinion, between doing delay financing. That way, I mean, if you got cash, you do all that, and then right after that, you don't have to wait the 6 months, and then you do the regular mortgage into that. I mean,
Well, there's some
in a
rules.
sense, kind of look to me like a hard money, but instead using their money, you're using your own money, and then after it's redone, then you do the cash back.
Yeah, the problem is, Philip, you're talking about doing a cash-out refinance on something you paid cash for. There's some rules, and it's been a long time since I've experienced it. You can't do that immediately. Whereas if you use a hard money loan, you can immediately refinance it. And doing a cash-out refinance is much more difficult, Philip. But do me a favor, email me this question and let me verify that with one of my mortgage brokers, because I haven't heard this question in a long time, and I do not know how to answer it correctly, but I will answer it by email, Philip.
Okay, we'll do that, Steve. Thank you.
Okay, thank you, Philip. Okay, Philip, my email is asksteve@getrealwealth.com. Asksteve@getrealwealth.com. Yeah, there's some rule that makes that not feasible, or it doesn't work as well as using a hard money loan. Now, if they've changed those rules, I'll find out about it, and we'll talk about it Monday. But I'll get this answer out to everybody on Monday. Okay, phone lines are open, 281-558-5738, 281-558-KSEV. You're listening to KSEV AM 700, the voice of Texas. Thanks for listening. "70% of the millionaires in America used real estate as their main investment vehicle." Listen to the GetRealWealth.com radio show to find out how you can do it too. Monday through Friday at 2 p.m. right here on AM 700 KSEV, the voice of Texas. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. If you've got a question for me, feel free to email me. It's asksteve@getrealwealth.com, asksteve@getrealwealth.com, or please give me a call, 281-558-5738, 281-558-5738. That's KSEV, 281-558-KSEV. Okay, we've hit the first 3 reasons of the 8 reasons that we chose real estate. The fourth is because for every dollar that you put into a piece of real estate, it makes you money 4 ways. The fourth way, appreciation, comes in 2 forms: market appreciation and forced appreciation. So let me just throw that in there now. We'll address that in a moment. The first way that it makes you money is cash flow. If you are making, it's the difference between your principal, your interest, your taxes, your insurance, your maintenance, your vacancy. The last 20 houses that I bought, they all made between $350 and $400 a month cash flow. And I had about $20,000 out of pocket, so that was between an 18 and a 24% rate of return right there. That's the cash flow. That's what makes you financially independent. That's the big goal. The second way that it makes you money is, I'm pulling off of in case you're wondering what I'm doing, I'm pulling off of my PowerPoint from the free introductory workshop, and I had a bunch of extra slides in there to explain that in detail. But the second way that it makes you money is equity capture, and this one always blows me away. I had over 100% equity capture on every deal that I did, every one of them. Some of them it was way above 100%. But basically it's the difference between what you paid and the after repaired value. So you take a little property off of West Green, my all-in cost on it was $150,000. The ARV was $200,000. So I picked up $50,000 equity the day I closed the deal. In other words, my net worth went up $50,000 the moment I close that deal. The third way that it makes you money is equity buildup. What is equity buildup? It's the principal pay down inside your mortgage. Every month your renter pays their rent, you pay your mortgage. You're reducing what you owe on that property every single month. See, and I guess I need to say it this way. It's very small at the beginning. It might only be a couple grand a year. But after long periods of time, 10 years, 12 years, it becomes 4 or 5 grand a year and can be an actual very nice rate of return on your initial investment, which is usually around 20 up to. Oh, I better hit this. This was a big question from an investor the other day at the free workshop. She goes, look, I'm not seeing any $20,000 down deals. I'm seeing 30, 35, 40. And yes, if you just patrol MLS, that's what you're going to see. $35,000, $40,000 out of pocket per deal. But if you hustle and find your own deals, the way I teach people to do it, you're going to have much lower down payments, 20 to 30 versus 35 to 40. Now, the last 20 deals I did averaged about $20,000 out of pocket, 18 to 20,000. But I've got a very high level of skill at locating property. And even if I teach it to you, you will not be as good as me the first year or so. And I hope that makes sense, and I'm not being disrespectful. It's just, it takes a while. Even if you take my 2-day class, I teach you everything, you're not going to be as good as me initially. But after a year, after you've done 4 or 5 deals, 10 deals, 20 deals, you'll be just as good as me. And if I've done my job, you'll be better than me at finding deals with those lower down payments. So let's get back to number 3, equity buildup. Equity buildup is the difference. It's just principal pay down. You're reducing what you owe. In the initial stages, it's only going to be about a 9% rate of return, but still that's better than the stock market, and that's the worst reason to buy real estate is equity buildup. Okay, the next way that real estate makes you money is appreciation. And there's 2 types, as I mentioned earlier. I wanted to do it multiple times, and I'll say it again later. It's market appreciation, and then there's forced appreciation. Forced appreciation only happens in commercial and apartments. It does not happen in single-family houses. In other words, if you go into a neighborhood where all the 2,000 square foot homes that are 3-bedroom, 2-bath, 2-car garage are selling for $200,000, and you buy one for $200,000, and you put $20,000 in upgrades into it, guess how much that house is worth? $200,000. There's no forced appreciation in single-family houses. But in apartments, that's a totally different story. In commercial buildings, that's a totally different story. Appreciation is only about 3% a year on single-family houses. Now, the problem is people misinterpret this. They say, oh man, so that's a 3% rate of return? No, you didn't pay cash for the house. You only have $20,000 in it. So let's say it's a $200,000 house that was $20,000 out of pocket, and that thing appreciates 3%. That's $6,000. 6,000 divided by 20,000, it's not a 3% rate of return. That translates into a 30% rate of return for you and your family. See, the rates of return, this is, I know some of you are going to lose your mind on this. Did you know that the rate of return on that property in West Green was 313% the first year I owned it? Let me say that number again. 313%. and 13%. How are you doing in the stock market? How's your gold doing for you? How's your Bitcoin doing for you? It's not 300% rate of return, is it? Now, the second year, you have to subtract the equity capture out of it, because you don't capture equity every year, only the first year. So subtract 250 from that, 313, and that leaves 63% rate of return thereafter when you add in appreciation, equity buildup, and cash flow. So, yeah, these real estate deals, man, they really change your life because the rates of return are so high. The other appreciation is forced appreciation. This is where you go and buy a distressed property, usually because of mismanagement. It needs, let's say we buy an apartment complex that needs $4 million in rehab. You completely rehab the thing. It may have only been worth $31 million when you bought it, but after you rehab it, fill all the vacant units, raise all the rents up to market, and do the rehab so your maintenance costs go down, all those things add up to increasing your net operating income. Your net operating income. And guess how a commercial property, such as an apartment complex or little building, is valued? It's based off the NOI. So anything that you do to increase your NOI increases the value of that property. In the 500 unit case study I did last night, it was an $11 million increase in value over a 2-year period. Now, this was a very expensive, 500 units. I think it was $31 million purchase, and then 2 years later it was worth 40. Doggone it, I wish I had those numbers in my head, but it was $11 million more, whatever that is. That's a powerful tool that can change your life. That's why when a lot of people join up to Real Wealth Academy and they go, I'm going to buy single-family homes, I'm going to buy single-family homes, they come out of the 2-day class going, I'm going to buy apartments, I'm going to buy apartments, I'm going to buy apartments, because of that forced appreciation that you control. It's not dependent on the government, not dependent on the market. You control it. Your family controls it, and you determine how much that property is going to be worth. It's an incredible tool for building wealth. So let's see. Let me scoot down here and make sure I don't miss anything. We are now talking about forced appreciation. We've talked about forced appreciation. We're now looking at number 7. Oh, I know what number 7 is. Oh, no, number 6. Here we go. The tax advantage. The nice thing about being a real estate investor is we pay the lowest taxes of any for-profit group within the United States. And the reason is that all the tax laws are designed to build what? The country. And what is the country? It's real estate. I know you want to say the country's people. Agreed. But people come and go. Real estate is there forever. So it's in the best interest of the government to do everything they can to get the real estate to continue to grow. This is power. It is wealth. There's a lot of reasons they do it. But bottom line, you have 2 distinct tax advantages when investing in real estate: depreciation and the 1031 exchange. And when we come back from the break, we'll address those and answer some listener questions that I got by email. All right, this is the GetRealWealth.com radio show. I'm your host, Steve Davis. Phone lines are open for one more segment, so please call me right now, 281-558-5738, 281-558-KSEV, the voice of Texas. Thanks for listening. Did you know that 95% of Americans fail to retire by age 65 and 36% are dead? The good news is that here at the GetRealWealth.com radio show, we know what the other 5% are doing. 70% of them own real estate. We are a mentoring group for new and experienced real estate investors. We will show you how to build a second stream of income that will allow you to retire at any age. I will be explaining this at a free 2-hour introductory workshop this month. If you would like to attend, please go to GetRealWealth.com. That's GetRealWealth.com. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. Phone lines are open for one more segment. So if you've got a question, it is important for you to call right now. It's 281-558-5738, 281-558-KSEV. If you're too shy to call in, or you're busy or at work, write down my email and email me anytime, 24/7. It's asksteve@getrealwealth.com. asksteve@getrealwealth.com. So we're talking about the sixth reason we chose real estate, which is that real estate investors pay the lowest taxes of any for-profit group in the United States. And the two things that cause that are depreciation and the 1031 exchange. I'm not going to go into detail on those two because that can be an entire show. But we will have people that, I'll have a CPA on here that will talk to you about it in the near future. And we had a 1031 specialist on last week. The seventh reason we chose real estate is because wholesaling can be done with no money and no credit. This is a great way to get your feet wet in real estate investing if you have no money and credit. Do not come to me with money and go, oh, I want to wholesale a few deals. I can't help you. That is not the right thing to do. You want to get what money you do have invested in income-producing assets first. Then, once all that money's invested, then you can look at wholesaling. But in most cases, if you got money, you've probably got good credit, you would switch directly to flipping to generate more capital to buy more houses or apartments. But wholesaling can be done with no money and no credit. And the eighth reason, same reason, only flipping. Flipping can be done with no money and no credit. And that's a skill that you've got to pick up. Really, everybody needs to do it because you run out of money. You know, even if you've got $500,000, say I'm going to invest $500,000. Once you get $500,000 invested, what do? For most people, they're stuck. I guess I'll just start saving. Okay, that's cool. How long did it take you to save up that $500,000? 30 years. That doesn't sound like a plan to me. A better plan would be, why don't you flip some houses, make 50, 100 grand a flip, and take that money and go buy more apartments or single-family houses. So that's the 8 reasons that we chose real estate above all other investment vehicles. This is not a comparison to stocks or gold or silver or Bitcoin or any of those speculative things, because those are not true investments. They are speculation or gambling. All right, any questions on anything I've gone over? Email me. It's asksteve@getrealwealth.com, asksteve@getrealwealth.com, or you can call me right now. We've only got a few minutes left. 281-558-5738, 281-558-5738. Okay, I've been itching to get to this one. This is an email from a Greg, and this is just crazy. He's got a 30-unit apartment. Congratulations, Greg, by the way. That's awesome. He's negotiating with a property manager. The manager is charging a $50 application fee, and he would like to keep the late fees. Okay, first off, Greg, you have got to release, fire, downsize, get rid of that person. Anyone that's taking money from your tenants and not reporting it and keeping it, that $50 application fee, that is a thief. And they start small and they get bigger and bigger and bigger. Next thing you know, they've stolen 2 or 3 months worth of rent and they're gone and you can't find them. You have got to fire this guy. The other thing is, Incentivizing somebody to have late payments is what you're talking about. You're saying, look, yeah, you can manage my property, and any late fees you collect, you can keep them. You just incentivized having late payments. That is outrageous to me. Now, if some property management company calls me up and says, well, we do that all the time, I don't care. You're not doing it on my property. You want to incentivize somebody to get tenants to pay late? That's ludicrous. You incentivize them. Well, one, I don't believe you should incentivize paying on time. That's the job of the property manager. That's like incentivizing somebody to breathe. There's no reason to incentivize them to get rents on time. That's what you hired them for. That's what their base pay is for. Now, do I incentivize them to lease quickly? Yes. I've had property managers where I said, look, you keep the place at a certain occupancy, I'm going to give you a bonus. Therefore, they got incentivized to keep the place occupied and to lease the units quickly. But definitely do not incentivize paying late. Totally wrong, Greg. But congratulations on your 30 unit. Get rid of that property manager and get somebody in there that you can trust. Because that person, if they'll steal from you a small amount, when they get the opportunity, they'll steal a large amount. Okay, next one is, okay, this is from David. Let me just answer the question, and you'll know what the question was. David, I never let my tenants do any work for me, with a few exceptions. Why? Because they'll always say that you owe them more money than you really do, and then they won't pay your rent. They'll hold the rent back. You'll go to court. Then they'll tell the judge that you never paid them for the work they did. It is a mess. It is a mess. Don't ever let a tenant do work on your house, with one exception. You have a contractor, a legitimate contractor, not a handyman. A legitimate contractor has a company, and you do it outside of the lease, meaning they write you a bid and you write them a check, and it's over with. Never ever let them take the repairs out of the rent. Absolutely never. They always pay the rent. You pay their fee for their services. Keep them separate. Never ever. See, people get cheap. They're greedy. Like, oh, I'll get my tenant to paint the unit. They'll do it cheap. Well, they're going to do a crap job. Painting is a mad skill. You got to be good to paint. I see people, you go to their house and they go, oh, look, we painted our own walls. Huh, I couldn't tell. I hope you heard the sarcasm. Of course you can tell. You paint your own wall. It's easy to tell when people paint their own houses compared to a house that's been painted by a professional. So there's the answer to that one. I hope you all figured out what the question was. Okay, the next one. What's important to have in my tenant lease agreements? Well, I use the standard TREC lease modified by my attorney. The members of Real Wealth Academy all use the same lease, and all it is it's the standard TREC lease that was modified a little bit, very little, because that lease is very balanced, very fair to both the owner who does their job and the tenant who keeps their promises. It's very unfair to a tenant who doesn't keep their promises, and it's very unfair to an owner who doesn't keep their promises. So in other words, it's a very balanced contract. We just modified a couple things to put a $250, the first $250 of any repair is the responsibility of the tenant. in the lease and so on. So what should be in your lease? Everything that's in the truck contract, Cody. Everything. All right. Next question, emailed from Matt. Oh, I'm sorry. He wanted to remain anonymous, but there's thousands of Matts, so sorry about that. But to-do list for taking over property with tenants. What should I be doing to prepare? Oh, you're inheriting a tenant. What I always do when I inherit a tenant is I go meet them with a copy of the lease that they signed with the old owner. And what we do is we go through it line by line item, just like I was leasing for the first time. Because I want to know what's in that lease, and then I want them to know their responsibilities, that I'm very serious about it. Then I inspect every 6 months. I've either got my AC guy going in there to inspect the unit, or I'm inspecting the unit. All right, this has been the GetRealWealth.com radio show. Thanks for listening, and have a great weekend.
This has been the GetRealWealth.com radio show. Please remember that this show is for entertainment purposes only and should not be construed as legal, tax, or investing advice. Always get a professional opinion before making any investment decision. To find out about the mentoring and consulting at Real Wealth Academy, visit GetRealWealth.com and attend one of our free introductory workshops on real estate investing. That's GetRealWealth.com. Thanks for listening and have a great rest of your day.